Let's get to some breaking news on the economy, though, first. The latest consumer price index report showing inflation did cool in September. NewsNation business contributor Lydia Moynihan joining us now. So take us through the October consumer price index report. What are some of the key data points here?
Yeah, well, Dow futures are just surging on this news, close to 1,000 points higher before the open. And this all on news that inflation is lower than we expected to see, the lowest numbers we've seen since January. So walking through those numbers, last month we saw inflation at 8.2% year over year. We were expecting that to dip to 7.9%. And instead, we got numbers that were 7.7% inflation year over year. Now, that core number, that is the number that the Federal Reserve is looking at. That is all of CPI except for food and energy prices. And that also dipped for the first time in many months. Last month, that number was 6.6%. We were hoping it would dip to 6.5% year over year, and instead it actually dipped to 6.3%. So everything coming in much lower than expected. Now, economists are already cautioning that we shouldn't be too optimistic on this news. They say we need to see a sort of consistent trend downward. So we need to see 2, 3, maybe 4 months of cooler than expected inflation data to really prove and demonstrate that we are, in fact, much cooler and heading in that direction. The other sort of thing that economists are cautioning about is they note that the reason this report was much lower is because of discretionary costs going down. So airline tickets and cars and some of those things that had just jumped. Airline tickets were 40% higher last month, year over year. Those have gone down. But of course, those aren't the things that we're necessarily buying every day, whereas food, energy, those costs are remaining pretty high. And as we head into winter, concerns, of course, that energy prices could get a little bit higher. So overall, good news, definitely a step in the right direction, but economists are still cautious that we're not exactly where we want to be yet.
And, you know, it's interesting because this is really good for the president, of course, the White House, seeing that inflation looks like it's going to be lower into 2023 and in the years to follow. Dow futures up 800 points. And we're seeing some positive news from this, which is going to help the economy. Hiring is still strong. Companies are still posting record profits. But do we have any kind of data to suggest what it's going to take to go from where we are inflation-wise to this 1.5% that they're predicting for 2023?
2023 seems like a pretty soon date to actually reach that. Rome wasn't built in a day. You know, we don't meet inflation goals in a day. All of these things are trends, and that's why you see the Federal Reserve Chair Jerome Powell, other economists say we need to make sure that this is, you know, a trend that we're seeing over many months, because one data point isn't enough to move the needle. And so we hear elected officials, we hear Federal Reserve officials say that they really we need to see these data points over the span of several months. And again, it's going to take quite some time for this to come down. You know, 7.7% inflation year over year is much lower than what we have seen, but by historically, it's actually still extremely high. So it seems like it's going to take quite some time for this to really abate to the levels that we want to see it.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.